Hi guys, Andy here. Let's have a look at the S&P 500. For the record, today is Wednesday, January 3rd. Time is around 6:30 p.m. GMT. So here we are looking at the weekly chart, and my take on the S&P 500 is that we made a wave 1 right here, wave 1 in the higher degree. Then we came down as a wave 2 in 3 waves, A, B, C. And from this low, I believe we started a new move up. So working on the wave 3 here, the wave 3 of this degree in the higher time frame. So this looks quite bullish, and in a minute I will continue with the discussion of the potential bullish scenarios. But I would like also to share a bearish scenario that actually also would fit in the data we have now from an Elliott Wave point of view. And that would be that the wave 2 low was not in right here, but that we can still expect this wave 2 low. So it's not on my chart. Let me quickly put it on the chart. So what I mean is that the wave 2 low can be in somewhere here after a regular flat or an expanded flat structure. Then it would be that this here, this 3 waves, 1, 2, 3, is our wave A. Then the upward structure right here would be a wave B. So for the moment, we did not take out the all-time high here in the S&P 500. We did in the Nasdaq and in the Dow Jones. If we hold the all-time high, then it would be a regular flat structure. If we take out the high right here, then it is an expanded flat. And in order to have an expanded flat, we should stay into this area right here, because if we go beyond the 1.236 FIB extension, then it becomes quite unlikely that this is an expanded flat structure, and then we simply have a continuation of the bullish scenarios as indicated here in green. And so the flat structure looks like this. This would be our wave A, wave B pullback, and then the impulse we are seeing here is our wave C, which would mean the end of our wave B. So it's not really relevant if we take out the all-time high or not. If we hold the high, then it is simply a regular flat. If we take the high out, then it is an irregular flat, given that we stay into this area. So I share this scenario with you because from an Elliott Wave point of view, it is a possible scenario. Then after this wave B, we can expect a wave C down, an impulsive wave C down, and then we should normally take out the low right here. But for the moment, I prefer to stick with bullish scenarios simply because we have a higher high, higher low sequence in the S&P 500 in the higher time frame. So in my opinion, for now, it makes more sense to put our attention on bullish scenarios. And so one possibility of a bullish scenario would be that from the low right here, we made a wave 1 here. We came down as a wave 2. We did not reach the 0.5 FIB retracement level, but we came quite close. And then from the low right here, from this wave 2, we could be working on a wave 3, and then a 4 and a 5 would follow to end here as a wave 1, and then we can expect another pullback as a wave 2. So that would be one scenario, one bullish scenario. It's my primary scenario for now. It is aligned with the Nasdaq, but there is also a possibility that would be very bullish, that or wave 1 in the higher degree will not be in right here, but that it was already in here. Wave 2 pullback in the higher degree, and then now we could be working on this wave 3 in the higher degree, and then the target area for this wave 3 we can find by taking the length of wave 1, the length of wave 2, and then this area here between the 1 and the 1.618 FIB extension would be our target for the wave 3 here in red. So unfortunately, at this moment, I cannot tell you what exactly will play out. Will it be like a shorter wave 3? That's a possibility. Normally, our wave 3 is the longest one, but that's not always the case. The rule is that our wave 3 cannot be the shortest one. And so if we have a shorter wave 3, for instance, ending where we are now, more or less, then we could still have something with a wave 4 pullback and then a shorter fifth wave. So our fifth wave has to be shorter than our third wave, because our wave 1 is the longest one and wave 3 cannot be the shortest one. And then this here would develop as a leading diagonal structure where our fourth wave can go into the area of the wave 1. That's a possibility in a leading diagonal. So for now, I believe on the lower time frame, we have to concentrate on this structure here, when this structure will be ending. I think this is the main question. And then on the higher time frame, on the weekly, on the daily, you should know that these kind of scenarios that I just described, that they can play out. So if we go then to the 4 hour, to me, from the wave 2 low right here, it looks like this here was our wave 1. So again, wave 1, it looks like wave 1 will be the longest one. Very shallow wave 2 pullback, so we did not reach the 0.5 FIB retracement. We are supposed, or if we follow the guidelines, then we should expect that wave 2 goes into this area. But this here was a very bullish structure with only shallow retracements. So the wave 2 was a shallow retracement. So I would locate the wave 2 right here. And then I think this here was our wave 3. And I believe the wave 4 is currently ongoing as an expanded flat structure. So wave A down, wave B, and then wave C down. This is what we are seeing now. So we are breaking the RSI trend line here. This is something typical for a wave 4. So therefore, I prefer to label it as wave 1, wave 2, wave 3, now wave 4. And then we can still expect a fifth wave. And here again, our fifth wave has to be shorter than our third wave. Our third wave cannot be the shortest one. If we go then to the 1 hour, here you can see the expanded flat structure I was talking about. So this here is our wave 4 area. If we take the length of our wave 3, then here the area between the 0.146 and the 0.618 is the area where we can expect our wave 4 to end. And as you can see, this is quite a big area. So therefore, we have to look at the sub waves to have a better idea where this wave 4 can end. Like I told you, I believe this is the wave A. Then here we had an overshooting wave B. As you can see, it stayed below the 1.236 FIP extension, so that's okay in my opinion. And so now what we are seeing here looks like an impulsive move down. So therefore, I believe this here is our C wave, which is currently ongoing. And yeah, I think the C wave is not finished yet. What I would like to see, as you can see, we have a bit of divergence here. That might indicate that the wave is ending, but I prefer to see a break of this RSI trend line as a wave 4, and then another low here with divergence. This is the pattern that I like to see for an impulse, and for the moment it's not yet on my chart, so therefore I believe we can expect another low in my opinion, and then this low would mean that the wave C could be finished here. So if our wave 4 is ongoing, then assuming that this here is our wave 3 low, this is not sure yet, but let's assume that the wave 3 low was in here, then we know that our wave 4 should go into the area between the 0.146 and the 0.618 FIP retracements. So this is our wave 4 area right here. So for now, I assume this is the wave 3, but yeah, if we look at the 15-minute, it is still possible that, okay, now this is really micro counting, but there is still a possibility that what we are seeing here, this move up from here, that this is just the 4th wave within the 5th wave we are seeing here. So it is possible marginal new high, marginal new low, of course, to have our 5th wave here, to end the 3rd wave, and then we have to recalculate our wave 4 area. And then if the low is in here, like I told you, I would expect a push into this area as a 4th wave, and then a 5th wave down to finish this wave C, which then also means the end of this wave 4. So that would be my best estimate. However, as you can see, like this wave 4 area is quite big. So an alternative scenario here on the lower time frame could be that what we are seeing here, this impulse down, is just the first wave of the wave C, and that we end with some kind of ending diagonal. So I would say like this structure, that this here will be our 1, 2, 3, 4, 5, and that our wave C ends like lower than we are currently. So let me put it in the right degree and color as an alternative scenario. So 1, 2, 3, 4, 5. So then we can actually end at the bottom of the wave 4 area. Something else we have to be careful for is, okay, this wave 4 area is calculated based on the Fibonacci guidelines with the 0.618 FIB retracement as the boundary. But these are only guidelines. Like here we have an support zone. So, and these zones can act as magnets, let's say, like they can really go towards these kind of zones. And like the true invalidation level is actually here, or wave 2 low. So as a wave 4, we cannot go beyond the wave 2 low. So this is actually our true invalidation level, but typically we should see a reaction from this kind of area. So the wave 4 retracement area, just because there is this zone right here, this support zone. I'm telling you that there is a possibility that we go beyond here the 0.618 FIB retracement level. Okay, that's it for now. If you enjoyed this analysis, please like, subscribe, comment to support my work. And I see you one of the next days for another update on the S&P 500. Have a nice day. Bye-bye.